Good morning, one and all present here. My name is Shifa Fathima, research scholar, research center in St. Claret College, affiliated under Bangalore University under the guidance of Dr. Shafir Pasha M, HOD, Research Center in Commerce, St. Claret College, Bangalore. So, title of my paper is Economic Sustainability in Agri-Commodity Market, a study of trend, pattern, and market resilience. Uh, in this paper, economic sustainability is defined as the long-term viability and stability of the agricultural commodity market, and it is measured by market capability to maintain a positive growth trend and its ability to observe and uh, recover from shocks without experiencing persistent determinal volatility. So this study investigates about analyzing long-term price trends and markets responses to volatility. Introduction. Agricultural sector is concerned of economic development and understanding the dynamics of its commodity market is crucial for ensuring long-term sustainability and stability. These markets are frequently exposed to a variety of shocks from geopolitical events and political changes to natural disasters and technological disruptions that can be significantly impact their price trends and volatility. The concepts of trend, pattern, and market resilience are key metrics for evaluating markets' health and its capacity to achieve long-term economic sustainability. So after reviewing several papers, I identified these certain gaps. Even though there are several studies have been investigated the price dynamics, volatility, and casualties in agri-commodity market, their attention has been paid to particular commodities or to a time window. It lacks intensive research which would combine analysis of other related commodities like Guar Seeds, Guar Gum, and Castor Seeds. Using longer analysis period and combining analysis like structural lake and volatility models. Furthermore, there is a lack of awareness regarding the findings of how these factors simultaneously influences the resilience of the market as well as the sustainability of economy within Indian context. In this paper addresses certain research questions. The first one, what is the long-term trend of commodity prices and how it is being influenced by specific structural breaks? Next one, what are the key patterns in the market, including both seasonal and intermarket relationship? Next, how resilient is the market to shocks as measured by the persistence of its volatility? Then the objective of my paper is to examine the price pattern and the changes across the study period. Next one is to assess the resilience and stability of these commodity market in response to the shocks. Next one, to explore the relationship between spot and futures prices of these commodities in the sense selected commodities, to analyze the trends in prices of selected agricultural commodities over last 10 years. Next, the methodology. The study employs quantitative research approach to examine the price dynamic market resilience of Guar Gum, Guar Seeds, Castor Seeds in India from 2015 to 2025. Both spot and future prices uh, used in daily prices series were obtained from National Commodity Exchange and government official reports. From SEBI annual reports we have collected the data. So basically this research has been used time series analysis in econometrics. So first one, ADF, Augmented Dickey-Fuller test, check the stationarity of the price and return series of the selected commodities. These three commodities were selected based on highly traded commodities in NCDX. In NCDX, totally 29 commodities were traded. Among that, 8 were the top 8 commodities were finalized. Among that, top three commodities which has continuously traded for last 10 years has been selected for my study. So after collecting the commodities, I have used the time series analysis. First one, ADF test to check the stationarity of the uh, data. Next one, Bai-Perron test to check the structural breaks. To identify the structural break, I used Bai-Perron test. After identifying the Bai-Perron and structural breaks, I used CUSUM square test to test the stability of the model parameter throughout the period of the sample. And trend analysis, yes, I have mentioned in my paper. I'm going to check about the trend, pattern, and market resilience of the selected agricultural commodity. In order to check the trend, I used trend analysis. And in order to check the pattern, I have used autocorrelation and Ganger causality test. And also to check the market resilience, I have used Garch model to examine the volatility clustering and persistence. So next come the data analysis and interpretations. First one, it is the ADF test, that is Augmented Dickey-Fuller test. This test is to test the data of these three commodities, whether it is stationary or not. So first, a primary thing in the econometrics model is the data should be stationary. So whereas if we look into these three commodities, when we are going at the at level values, all these three commodities values P levels are greater than 0.05. So it indicates these commodities are non-stationary at level. After doing first differences, all these commodities values are become stationary. This is the result of augmented Dickey-Fuller test. Now these selected data are fit for further analysis. Next one, I used Bai-Perron multiple structural break test. This test used to confirm the structural changes that might have occurred in these price series of chosen agricultural crops. The test identified the amount, time, and confidence intervals of major cuts in the time in the series. All three series have four structural breaks here. So date wise, I have identified the structural breaks. After identifying these breaks, we have to use the dummy variable concept, and we have to uh, uh, fit the data into the further analysis. After identifying the Bai-Perron structural breaks, I used CUSUM square test. See, before the first graph, that is graph uh, 6.3.1 represent there is a deviation in the uh, at 5% significance level, there is a deviation. This is before using the dummy variables. After using dummy variables in my data set, after correcting it, the uh, these Guar Seeds are fit for further studies. In the same way, I have used for other two commodities also. For Guar Gum, again there is a deviation in the CUSUM square test. After using the concept, the data now fit for the further studies. In the same way, for the castor seeds, again after using the dummy variable concept and after cleaning all the data sets, now it is fit for further study. This is the result. Before using the concept, the uh, price data or the collected data were deviating. After cleaning the things and after introducing W variable concept and modifying the data, now the data are fit for further studies. Yes, now I I I did a trend analysis to identify the trend of how positively or negatively agri commodity have a trend on these three commodities. Yes, a statistical result shows that there is a statistically significant trend for these three commodities, with the p-values of all the coefficient being much less than 1% significance level. Guar seeds and castor seeds experiencing positive and increasing price trend with time, whereas Guar Gum has small negative time coefficient that indicates down, downward trends before the break. The interaction turns also positive and significant, which would mean the which would mean that the slope of price trend slopes upward after the break. Next, autocorrelation test. Each commodity used to analyze the price pattern persistence and serial correlation was calculated in the autocorrelation and partial autocorrelation functions. The results showed a high coefficient of positive autocorrelation at short lag with all the commodities, which means uh, permanency and clustering effects of price movement. This implies that there is some persistence in price movement as reflected in one's future prices, which is common in agri-commodity market. Next comes the Garch model. Before Garch model, we used to calculate the RHLM test to check the short-term volatility. The outcomes indicate an easy rejection of null hypothesis, probability of F statistics, and p-values are involving in Guar Seeds, Guar Gum, and Castor Seeds. It is an affirmation that there is a high arch impact on these commodities, which implies that the volatility of the price return is not constant and it depends on some past square residuals. So this indicates the arch LM test were conducted to determine if the volatility of return associated with selected commodities are constant or changes over time. That is considered as the heteroscedasticity. The result of heteroscedasticity test are all the three commodities p values are less than 0.05, providing very strong evidence of time varying volatility. These results confirm the presence of conditional heteroscedasticities in these cases, signifying that Garch model is necessary. So next come the final Garch model, 1:1 model. Guar seeds and guar gum, these are some of arch and Garch coefficients. Combined values are more greater than 0.5, and the values were like 0.893 for Guar seeds and 0.734 for Guar Gum, which is closer to 1. This indicates a high degree of volatility persistence. The significant Garch term suggests the past volatility is a strong uh, predictor of futures volatility. And even same for castor seeds, the values were like 0.9409. Castor seeds displays the high level of volatility persistence among the three. This high value suggests that volatility shocks are very slow dissipate with the arch and Garch terms are statistically significant and contribute to this persistence, indicating that the market shocks and lagged variance plays a crucial role in shaping the current volatility. Next, this is to identify the pattern in the agri-commodity market. I have used Ganger casualty test. So, uh, for all three commodities have collected both spot and future prices, and vice versa it is has been calculated. The outcome indicates that there is a bidirectional causality between the returns of spot and futures on all the three commodities. This means that we can expect the information flow to occur either the directions, such as that information flow on past futures price may assist in determining the spot prices and vice versa. So it indicates that there is a both markets and depends on each other for the price determination. For in order to determine the price, the both markets are depend on each other. Finally, I would like to conclude in this way. This study has provided a detailed empirical investigation into the dynamics of agricultural commodity market with a specific focuses on trend pattern, and resilience. Initially, the analysis revealed a clear and statistical significance of upward trend in the commodities price series, which is notably accelerated by confirmed structural breaks. This finding supported by highly significant OLS regression highlights the fundamental shift in the market's long-term trajectory. Further, decomposition confirmed that while the long-term trend is a primary driver of price movement, seasonal patterns and irregular fluctuations play a minor role. Next, the core of our research on market resilience was addressed through Garch 1:1 model. The model coefficients of both Arch and Garch termed were found to be highly significant and confirming the presence of volatility clustering. Uh, this is a crucial finding as it suggests the market shocks are not quickly absorbed. Instead, periods of high risk and uncertainty tend to be prolonged and demonstrating the market exhibits a low degree of resilience to the shocks. It takes certain time to recover from the structural changes or policy shifts. The market is not quickly absorbing the shocks. It is taking some time to recover from the structural breaks. In a summary, the research provides a strong empirical evidence that the market has experienced a significant and accelerating growth trend. It remains vulnerable to shocks due to its high volatility persistence. The findings of low resilience and high interconnectedness is a crucial insight for stakeholders informing policy and risk management strategies aimed at fostering long-term market stability and sustainability. And further research opportunities might be like a future study could analyze the specific impact on government policies or regulations on market trend and resilience. So here the futures scholars or the researchers may take up a few government policies on sustainability or some other government policies on agri commodities, and they can focus it on a policy wise or event wise study. Next, given a paper focus on sustainability, as a follow-up could explore the relationship between sustainable farming practices and market performances. So these are few suggestions for the upcoming scholars. Thank you.